Hello, I'm Noel Lim on ASEAN Speaks by Maybank. The Chinese Communist Party's 20th National Congress came to a close on Sunday, and President Xi Jinping extended a historic term as the party's leader. We look at Maybank's economic outlook for China and how it would affect ASEAN countries. Suhaimi Ilias, Group Chief Economist, discusses with the analysts across the region and also about the markets.
Good morning, everyone. Let me start with the usual recap of what happened last week. Generally, I think stocks ended better. MSCI All-Country World Index rose 3.2% last week, although still 23% down year to date. US 10-year bond yield reached a 14-year intraday high of 4.33% on Friday morning. Comments by Fed's officials on interest rate policy were mixed. Some Fed officials warn of higher interest rate for longer, but others have begun signaling desire to slow down the pace of rate hikes soon and stop raising altogether early next year. But FX market continue to see the effect of aggressive rate hikes by Fed so far in strengthening the US dollar. Japanese yen weakness was in the spotlight after hitting 32-year low to trade above 150 level against US dollar. Japan reportedly spent $30 billion to prop up the Japanese yen last week. Meanwhile, in the move to curb rising bond yields and support the central bank's ultra-easy monetary policy stance, Bank of Japan initiated emergency bond buying operations last week, purchasing bonds with maturities between 10 and 25 years. In UK, Liz Truss resigns after 45 days in office, making her the shortest serving prime minister. Her government collapsed in the wake of the market turmoil, sparked by her mini budget proposals to slash taxes and boost borrowing and spending, that also saw Chancellor of the Exchequer Kwasi Kwarteng step down earlier. Overnight, the news is former Chancellor of the Exchequer Rishi Sunak will be the next prime minister after others like Penny Mordaunt, leader of the House of Commons, pull out of the race, and former PM Boris Johnson said he is not making a comeback. Still on politics, Malaysia will go to poll on 19 November, following the dissolution of the parliament on 10th of October, and nomination date of the 15th general election will be on 5th November. 23rd October handed President Xi Jinping's a third 5-year term as party chief, which will also pave the way for him to be retained as president in March next year. He also appointed 6 close allies to the Politburo Standing Committee, cementing his grip on power. Data-wise, aside from the release of China's third quarter GDP, which rose to 3.9% year-on-year, ahead of consensus 3.4% year-on-year, and after the virtually stagnating to 0.4% year-on-year in second quarter, to give 9-month 2022 growth of 3%. Other key economic data to watch this week include strings of Purchasing Managers Index numbers for US, Eurozone, and Japan, European Central Bank and Bank of Japan policy meetings on Thursday. ECB is expected to raise its policy rate by another 75 basis points. And we will also have September inflation data for Singapore, US, as well as third quarter GDP for US. This morning, we will be talking to Hak on latest ASEAN X macro on China reopening scenario and impact to ASEAN. Joey and Brian on the economies and monetary policy of Indonesia and Vietnam. Andi on FX, and we have Wasu and Suttatip on ties, telcos, and home improvement sectors. Let's start with Hak Bin. Hak Bin, in relation to the latest ASEAN X macro note released last week, maybe first question, what actually has been holding back China from reopening? And is there anything from last week's China's Communist Party Congress to suggest China is reopening?
Hey, hi, morning, Suhaimi. Yeah, I guess the China reopening is the big wild card, especially for next year. And I think there are a lot of investors hoping that the China reopening will materialize to offset the impact from a potential global recession. But so far, any shift, I think, from zero COVID will likely be slow and incremental. The problem is that, even though 91% of China's elderly population is fully vaccinated with 2 doses of the China non-mRNA vaccine, only 67% have received a booster shot. And generally, antibodies triggered by the vaccines drop to a level that's considered low after 6 months. The population lacks natural immunity because when you sum it all up, only about 1 million cumulative COVID infections, has occurred in China. So any kind of broad reopening will actually lead to a surge in infections and test the healthcare system, at least in the initial phase. And I think, just based on some of the low fatality rates, you're going to get a few 100,000 deaths. There are some estimates that go up in the millions. So is that acceptable? This could trigger a backlash as Xi's personal stature is directly bound with the success of zero COVID. So I think odds of Xi sticking with the zero COVID actually even next year remains pretty high, even in a languishing economy, and probably the steps will be incremental. China, there is a Bloomberg article saying that China is considering relaxing from the currently 7+3, 7 days in a hotel, 3 days at home in terms of the quarantine requirements, to a 2+5, I guess following kind of Hong Kong, 2-style, which is 2 nights in a hotel, 5 days in at home. So I guess that would help if they go along in that direction. We'll see whether that materialize. In terms of Xi's new team, I think given that economy and the markets have seemed to gone down the priority list, and I think the team is more the loyalists with focus on national security, on defense, on Taiwan. It's hard to see that this change in the team will accelerate the pace of the reopening.
Okay, but I guess in the event or scenario of China's reopening, how will that impact ASEAN? And in your opinion, which ASEAN economies will benefit the most and the least from this hypothetical sort of event at this point of time of China's reopening?
So China reopening will help ASEAN decouple from a US or global recession. China, just to recap, is ASEAN's largest market. It accounts for 16.3% of ASEAN's total exports. And recall that ASEAN exports to China actually have stagnated with the slowdown in the China demand at home. And even like Singapore exports to China at the latest data that came out last week was actually contracting by more than 30%. So that would be a big boost if China relaxes and will support domestic demand, which revives some of ASEAN exports to China. China also accounts for 22% of ASEAN tourist arrivals pre-pandemic. Thailand and Vietnam are the big winners here. They contributed almost 3.1 and 1.4% GDP respectively. And of course, the China Belt and Road investments have slowed down dramatically since the pandemic and with all the lockdowns. And there are actually a lot of Belt and Road project commitments that was in the works, and hopefully some of this revive if China reopens. That's really for Indonesia, especially Cambodia and Laos. So when we examine the impact of China's reopening across all 4 channels, the 4 channels being exports, tourism, investments, and also the energy channel, we find that actually Malaysia and Indonesia will be probably the big winners across all 4 channels. Why they're larger is because the other guys are actually energy importers. Just bear in mind that if China does reopen, it's not all positive. That China's import oil demand has actually collapsed by quite a bit, and when China does reopen, oil prices will shoot up. Inflation pressures could actually intensify, and maybe complicate the central bank monetary policy even further. China does account for nearly 20% of world oil imports. So China reopening does benefit energy exporters such as Indo and Malaysia, but hurt energy importers, especially Philippines and Thailand, which are actually already hurting from a wide current account deficit. So in our ranking, we have Malaysia, Indonesia, big winners across all 4 channels, and then followed by Thailand, Vietnam, Singapore, and then Philippines will gain the least due to the smaller economic links with China and also negated by the higher oil prices.
Of the 4 channels you mentioned just now, in the event of China reopening, I guess twisting a bit the question earlier about which ASEAN economies will benefit the most and the least, of the 4 channels in the event of China opening, which would be the most immediate and, in your opinion, would be the sort of a lagging?
Yeah, so on table 1, we try to rank the impact of those channels. But basically, the idea is that if you do relax, hopefully there'll be fewer, less strict lockdowns within China. So even China domestic mobility will probably increase and recover faster, and that would help the ASEAN export channel. So my impression is that the export channel is probably a more immediate, especially since China import demand and the latest data for September is actually slowed to almost 0% as well. That would be the most immediate one. And remember that even though they relax the quarantine requirements, China still is very restrictive in terms of new passport issued and so on, which means that the return of China tourists to the other countries, Thailand, Vietnam will be very slow, right? So investments also require more Chinese businessmen to probably travel outside the country. And so I suspect that when they do open, the permission and the passports will be issued more for business travel, at the early stage rather than mass market tourism. So yeah, exports will be probably the more immediate channel, and then tourism investments will be a bit slower with a reopening.
Right, thanks, Habin. Let's move to Indonesia micro. Juye, Bank Indonesia raised interest rate last week, but at the same time relaxed consumption credit policy and said it will continue conducting FX and bond market interventions, mainly to stabilize the currency. Do this mixture of policy measures in a way represent departure from the inflation targeting mandate, or just to reflect the reality of current economic and market conditions?
Hi, morning, Suhaimi. Morning, everyone. So yeah, BI hiked by 50 bips last week for the second straight meeting. Now policy rate is at 4.75%. That's back to pre-pandemic levels. And at the same time, like you mentioned, it extended easier down payment rules on property purchases, the 100% LTV, and auto loans with 0 down payment by 1 more year until end 2023. I think the current economic and market conditions may warrant a mix of these policy measures. The rupiah is weakening because of Fed's aggressive tightening, and domestically inflation is climbing due to the fuel price hike. So keeping credit rules loose will help to cushion the impact of rising interest rates and inflation. And ever since the pandemic, there has been growing effort by the government to broaden BI's mandate. Last month, the parliament formally proposed a bill to widen the mandate to include economic growth, and also to formalize its bond purchases in the primary market. But of course, there is a concern that if this were to be the norm, it would raise concerns about the autonomy of the central bank going forward.
What is Bank Indonesia's assessment of the overall macro outlook, in terms of growth, inflation, that kind of stuff? Is it in line or differ with our house views?
So BI has maintained its growth forecast for this year at 4.5 to 5.3%, and it does expect growth to hit the upper end of that range. They are looking at solid growth in third quarter, supported by private consumption, investment, as well as exports. And for 2023, the governor indicated that GDP growth should come in at around 4.6 to 5.3%. And this is despite the higher risk of global recession next year. Our forecast of 5% for this year and 5.1% in 2023 does fall within the range of BI's estimates. But we are seeing some signs of slowdown for the economy. The fuel price hike and the more aggressive tightening by BI may dampen domestic demand in the coming months. We already saw consumer confidence dipping in September to a 5-month low, and exports have also finally showed signs of easing. In September, it moderated to 20% compared to 30% in August. Both commodities and manufactured exports have been easing from the highs in the previous months.
All right, thanks, Ji. Let's move to Brian and talk a little bit on Vietnam. Brian, like the flexible or floating currency systems of other countries, Vietnam's, I suppose, manage, if not pack, currency system is also under pressures against the rising US dollar. What has the central bank, State Bank of Vietnam, been doing to address the FX situation? And are these measures sufficient to stabilize the dong? I mean, my question also is, what else do you think SBV can do and would do? Or is further fall in the dong inevitable?
Yep. Yeah. Hi, Suhaimi. Morning, everyone. So SBV hiked policy rates by 100 basis points on 23rd September. And that was also to support the dong. And this was its first post-COVID interest rate hike. And today, they hiked by another 100 basis points. So that takes the cumulative hikes this year so far to 200 basis points. And this has taken policy rates to pre-pandemic levels. So other than that, they are also, allowing the dong more room to depreciate so as to reduce pressure on their dwindling foreign reserves. The SBV widened the USD Vietnam dong trading band to 5% on either side from 3% to allow more room for the currency depreciation, and that was just last week on Monday. I think that the Vietnam dong will continue to face selling pressure as in the months ahead, as the Fed remains hawkish and resolute in its resolve for aggressive interest rate hikes. Despite SBV's suite of measures that it has done so far, the year-to-date Vietnam dong depreciation against the USD has accelerated to around 8.5% as compared to just 4.8% in end September. The market exchange rate for the USD Vietnam dong is pushing against the upper bound of the trading band. I think that what the SBV can do if this dynamic persists, we cannot rule out another effective or actual FX devaluation, such as via adjustments in the sensitivity of the exchange reference rate to daily market movements.
I mean, Brian, is the level of external reserve a limiting factor?
Yeah, sure. I think so. Yeah. Mm-hmm.
And what's your thoughts now with regards to interest rates outlook for Vietnam now?
Sure. Yeah. So I think the level of exchange rate reserves is indeed a limiting factor. So by our estimates, the SBV has sold around maybe 23 billion USD of its reserves so far. Its peak reserves this year was around 109 billion. So we estimate that the foreign reserves right now stand at less than 90 billion US dollars, which is equivalent to just above the traditional reserve adequacy metric, which is 3 months of imports. So I think that the SBV might want to conserve its reserves going forward, because you never know when another rainy day might hit. So that factors into our view for possible exchange rate move to possibly allow another effective or actual FX devaluation. As for my view on rate hikes for the rest of this year, so we are reviewing our forecast right now. But my preliminary sense is that since already there have been 200 basis points of hikes so far, my view is that these hikes are front loaded, and I think that the bar for another interest rate hike this year would be quite high, given that these 200 basis points would already have a dampening effect on economic recovery. Yeah.
Thanks, Brian. I'm going to continue with this topic of FX. We have Andi with us. Andi, dollar strength remain unabated. Yen trading around 150, rupiah well over 15,000 now, and ringgit broke another key resistance level against the greenback last week. I mean, first question, what's the house view on dollar now? Are there more upside, or you think the dollar peak is near?
Morning, Suhaimi. Thanks. I think just simple answer. Dollar in general, dollar index, we probably would see a bit of today's swings on a week-to-week basis, but in general, the general trend is I think it will remain modestly supported. One of the main reasons is I think as long as the US macro resilience or data out of there holds, and I think the grind lower in the prices is still slow, I think the dollar strength will be there. So our general view broadly, we think dollar will continue to be supported into end of first quarter next year, and it potentially creeping into the second quarter. But we are actually pricing in possibly some dollar retracement towards the middle of next year. So what that means is that dollar will remain supported into end of the year quite strongly, maybe remaining flattish or remaining slightly supported in the first quarter, and then potentially retracing middle of next year onwards in 2023. But we need to see the US macro resilience story, whether it holds more strongly, especially into the first quarter of 2023. So our sense is, yes, we've seen dollar yen above the 1998 high, 147.66 is close to the 150. There has been interventions on the yen front and all that, but recently we're seeing some euro and sterling strength picking up slightly. But these are short-term moves that we've seen. So this has led to dollar sort of softening a bit over the past day or so. That could help limit some of the dollar strength, but in general, we still think dollar will continue into end of the year and going into first quarter next year. Suhaimi?
We've heard Brian just now on SBV, what SBV can do, and to address the issue of Vietnamese dong. I think in general for central banks, it seems to me the obvious policy measures to stabilize currency is interest rate hikes and using your external reserve to initiate FX market intervention. But it doesn't look effective. Or perhaps you can highlight to us under what conditions that can work first. And secondly, what else are in the central bank's toolkit to address this current FX issues?
Yeah, so in current situation, it is a bit different because the dollar move. In general, what we're seeing now is essentially a strong move in a reserve currency that most of the Asians or most of the world is actually pricing itself in. So when you have a sustained dollar move, which is the bilateral currency on the other side of your currency, and in a sustained way, it is going to be difficult to continue to do spot intervention. So generally what central banks do is that they will either buy or sell dollars against the currency. So in this case, they have been actually selling dollars, which means reducing their reserves and buying, in other words, buying their currency to support the currency because of the decline in the currency. So when there's a sustained move on the dollar front, it makes it very difficult because the reserves will be depleted faster than normal, and because it's sustained. So so that's one situation where it's different. The other is that I think macro fundamentals actually makes it a bit hard as well, because whatever the US is doing in America, some of the macro fundamentals in the domestic current countries in the rest of the world might not be the same as the US. So it makes it not conducive, and especially when now the inflation issues is key, and when dollar is strengthening, it affects purchasing power of some of these countries as well. So conditions for it to work would need a not so sustained move, and typically macro conditions in the domestic currency should not be actually as bad as it is now. So your question on what else central banks can do to address the issue, I think the one way that they've been doing the spot intervention, which is doing which I mentioned just now, there could be jawboning, actually further restrictions or verbal or concerted efforts to ask possibly investors or GLCs to invest locally and not lead to currency weakness. We've seen some countries do that. Of course, the other move would be to move on the interest rate front, especially for countries that are doing interest rate policies. The other one would be, which we think is quite low at the moment, is coordinated interventions by central banks. which is actually not a high probability now, especially now the situation is with China as well, which is a big sort of a economy and reserve currency, unlikely for them to intervene at this point in time. So hiking interest rates is possibly one way to continue to stem outflows and within control of central banks. Finally, the other way is, of course, to do a fixed exchange rates or capital controls to make sure there's no outflows. But that will be quite drastic and will be moving against the grain of possibly capital markets and will affect further outflows. So my sense is there's going to be continued FX spot interventions to stop the pace of weakness of currencies and potentially some of the forced efforts to reduce weakness by making sure companies or internally do not actually lead to further weakening of the currencies with their portfolio outflows or investments abroad, and then potentially hiking rates will continue at the same time as well. So I mean,
thanks, Andy. But before I let you go, I have to ask you this question. What's your thought on ringgit in the run-up and in the aftermath of the election?
Yeah, so I'm sure I expected you'll be asking me this question, but it is going to be tough. We've seen before on the domestic front, in the run-up to the elections, it leads to volatility. There's increased volatility, and could actually see that by the end of 2022. Elections and all that could lead definitely to a base case scenario of sustained volatility. In the past, what we saw in 2018, in the last elections on May 2018, the dollar ringgit actually rose by more than 8% for more than 2 quarters, also from second quarter to fourth quarter 2018. But this bulk of the swing was actually broad dollar strength and also oil softness. But if you look at it from a trade-weighted perspective, the impact on ringgit is largely modest, about 1.5 to 2% over that period. My sense is this time around, it depends on the scenarios. I think, Suhaimi, you have a few scenarios that you had. So the extent, though, I think could be on the basis conditional on whether there are clear signs of ability of potentially the next ruling party coalition to maintain create that coalition in the first place and maintain policy continuity. In the past, the fact in 2013, when there was a bit of parties won the seats, but there's another party which won the popular vote. There were protests and disruptions in policy making. It weighed on confidence. Ringgit actually weakened for about 4 to 5 months. So I think we need to see what the scenarios are, but in that sense, we need to build in possibly some element of weakness, maybe up to 8 to 10%, potentially leading to ringgit possibly going beyond 5, just based on domestic factors alone, excluding the dollar side of things. So thanks.
Thanks, Andy. Let's move on to Thailand. We got a couple of sectors to chat about. Wasu, in Thailand, telco sector, the main news recently is the regulator's conditional green light for merger between True and DTAC. In your view, is the coast clear for the completion of the merger, or are there still issues that need to be addressed? I mean, what are the key events and timelines to watch out for? And essentially, what's your advice to investors?
Okay, good morning, everyone. So the coast is not 100% clear. There are 2 issues to watch out for going forward. There's a small issue and a large issue. The smaller one is about the measures being announced by the telecom regulator in BTC on the 20th of October when they gave the green light to the the merger, right? So right now, True and DTAC have not received any official document from the NBTC yet. So I think within the next 1 to 2 weeks, the operators, the telecom operators, should receive an official document, and then in November, the operators should go and seek more clarity on these measures that will control the new coast operation going forward. And the measure to watch out for is the price control. So the price control that was announced implied that there should be 12% price decline, but we do not know how they calculate the price decline. Like, for example, the price decline from what base exactly, the current market prices or the current regulation. We are quite, there's no clear-cut details on the price decline. So the smaller issue that I'm mentioning is that there needs to be more clarity on the measures from the regulator. So that's number one. Number two is about the upcoming lawsuit. So in the paper that I just published this morning, I mentioned that there could be a downside risk to our timeline. So our timeline right now is for the telecom operators to seek more clarity on the measures in November and the merger to be completed in January. But there's a risk to that timeline because the Thailand Consumer Council, or TCC, is planning to file a lawsuit at the Central Administrative Court in November as well. So there are two things that the TCC is asking from the admin court. Number one, it is asking the court to revoke the NBTC's green light process for the merger. Number two is asking for a temporary injunction on the amalgamation process of TRUE-DTAC. So in our worst case scenario, the merger can be delayed by at least a year if the court orders a temporary injunction, mainly, which is basically a halt to the merger process, so long as the lawsuit is still active in the court. So that's the downside risk that we have to look for. So I think November, a lot will be going on. The first one, there should be more clarity on the measures, the measures announced by the NBTC. Number two, we should see the detail of the upcoming lawsuit to be filed by the TCC. And then right around late November and early December, we should hear about whether the court will order a temporary injunction on the merger or not.
Let's move to Suttatip. Suttatip, how do you see Thailand's home improvement sector generally being affected by the current heavy rainfall due to the monsoon transition season? I mean, ultimately, my question is really, is this just the usual purely seasonal impact, or is there a case for investing in companies that build business resilience against Mother Nature, which is, I suppose, pertinent in these days and age of ESG investing and dealing with climate change?
Okay, good morning, everyone. I do believe that the current rainfall and monsoon transition season are partly due to the climate change. So to cope with this issue, I think some home improvement players in Thailand now have focused more on the ESG issue, especially the environment issue. Some has already installed the solar panels to generate the electricity in the store and to reduce the carbon emission. And some players, for example, Home Pro also has a target of the 100% zero waste in the year 2030, and the company now achieved around 84% in 2011. I think that Home Pro has a strong commitment on the ESG by setting a roadmap and achieving considerable progress. And the other companies, like for example, Siam Global as well, they also set up the solar panel to reduce the usage of electricity. So overall, for the home improvement sector, I think they now has focused more on the ESG issue and to manage with the problem of the climate change.
Right. Thanks, Suttatip, for that kind of quick insight into the efforts by the home improvement sector in Thailand to basically make themselves ESG ready and ESG investable. Call it a wrap this morning, and have a good week ahead.
Speak to your trading rep and check out market insights on the Maybank Trade app. I'm Noelle Lim on ASEAN Speaks by Maybank.